Good morning, listeners, and welcome to the Trade Talk podcast. Day by day, the volatility is increasing in the US markets, and Tuesday was the perfect example of it. At one point of time, US markets were trading nearly 500 points into positive territory. From there, all the way it went down to negative territory, and finally, it closed with a sharp gains of 350 points. We saw equal amount of volatility in Nasdaq as well as S&P 500, and both the indices closed at the highest point of the day. With the SVB dust beginning to clear, the bond market has resumed pricing in better than even odds of a Fed rate hike next week. Still, investors who were predicting a 50 basis point jump are now anticipating a 25 basis point move, with a pause still an option. That is after US core inflation accelerated to 0.5% month on month in February and sped up to 5.5% year on year. Headline CPI slowed to 6%. All these things are helping US markets to rebound from lower levels, and again, based on the news flow, we are going to see a lot of uncertainty sort of scenario for the next few days or till the announcement of the final outcome on the interest rate in the Fed meeting, which is on 22nd of this month. So we are going to see this volatile activity, and it will definitely keep pressure on the equities, as they are more sensitive to the this type of news flow is more sensitive to the equity markets. Singapore Nifty is trading nearly 90 to 100 points higher as compared to its previous close. On Tuesday, we saw dip decline during the day close to 17,000, and from there it recovered back to the levels of 17,050. There was huge amount of put writing at 17,000, but at the same time, we saw shifting of call writing from 17,500 to 17,300 or 200 levels. So if there is any rebound, then close to 17,150 or 200, we should look for reducing week long positions. At the same time, short sellers should look for adding some short positions close to 17,200 levels, with a final stop loss at 17,300. On the downside, again, the market may revisit the levels of 17,000, or it may even fall to the levels of 16,900 or 850, where the market is having next leg of support. In the past, I mean to say in the month of September 2022, when the market was correcting from the highs, we saw markets found major support at 16,750. So between 16,900 to 16,750, the market is having ample of support in terms of retracements, extensions, as well as based on the option statistics. So if there is a medium to long term view, then we should look for adding some good companies between this 16,900 to 16,750 levels. And for the bank Nifty, the important level is around 39,000. Below that, the chances of hitting 38,500 would turn bright. Nifty IT index was down. There we are expecting some short covering in today's date, as we saw sharp gains for Nasdaq. But on the higher side, again, we are going to see some profit taking in that space. We like Tech Mahindra currently. Other than that, I think we need to be a little bit stay away. But yes, if we see the Infosys, is dropping below the levels of 1400, then there certainly we should look for adding the stock with a medium to long term view. From the private bank space, we like HDFC Bank, and from the PSU baskets, our focus or concentration is more on the Canara Bank. Metals and chemicals should do well. Yesterday also, when there was weakness in the market, we saw resilient activity for metals, especially for steel companies. And from the chemical basket, PI Industries or SRF, these are the stocks on which we have bullish view, and we should be buyer if there is any weakness during the day. That's all from my side for the day. With this, I am ending today's morning call. Thank you very much for listening me. Have a great day to all of you.